All right, so welcome to today's session, and I'm going to be presenting immediately, though we won't be really taking much time in this particular aspect. I'm just going to explain some form of liquidity to you, and I am not going to be diving deep into it tonight, right? We'll be commencing everything in the next session, which is actually the part 2. So remember, if you've been going through our sessions and everything we've been talking about lately when we started the trading course, you see that we've already started talking about liquidity and we talked about some aspect of liquidity, right? Now, you understand that we've talked about the basics aspect of liquidity and others. Now we would be advancing a bit and I'll be explaining some things. Now, when we talk about liquidity, you know that liquidity is very, very important in the financial market. And when you don't understand liquidity or when you don't take note of liquidity, you would end up being what the liquidity, as it's been said. Now, to dive deeply into it, let me quickly have some write-ups on my screen. Now, when we are talking about liquidity, right? We have different types of liquidity. You might have heard about people talking about inducements, people talking about what's it called? People talking about internal liquidity, external liquidity, and all of that. Now, if you want to flash back to whatsoever thing we've discussed, right, from the market structure down to the order block, you realize that I said when we have something of this nature and we push to the upside, right, I said price would come to take out the point C, which is what the trap. Now the point C that we labeled here, or what we call trap here, is called what? Is a form of liquidity, and it's called what? An inducement. But that's by the way. Now when we are talking about order block, I said last push down before the push up, and I explained some things. And you realize that at this point, what do we have here? After price takes out the form of inducement, and or where does it comes to? It comes to the demand and what keeps pushing. I'm just trying to refer back to whatever thing we've talked about. So now when we are talking about liquidity, we have, most importantly, we have 4 types of liquidity. We have the transactional liquidity, it's also called the TLQ. TLQ. We have the structural liquidity, SLQ. We have the inducement liquidity, liquidity, and we have the order flow liquidity. Order flow liquidity. Now, these are the 4 types of liquidity we have. Now, when we are talking about the transactional liquidity, mind you, I won't be diving into the charts tonight. We'll be diving deeply into the charts in the next session. So when we are talking about the transactional liquidity is mainly for what? For corrections. And what do we mean by what? By corrections. Now, when we are talking about corrections, right, we are literally talking about when price is trying to retrace. Now, let's take, for example, when we have series of higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. Now, all these points that you identify as your higher highs, that price comes to what? To take out or break through. These are also forms of what? Liquidity. And these are called what? CLQ, transactional liquidity. They are called transactional liquidity, ELQ. So when price breaks structure, you should know that what? Price has taken out TLQ. And now, what does it mean, TLQ, transactional? It means a transaction has been carried out. And now, when the transaction has been carried out, the transaction needs to be what? To be completed. That is why when you see that price breaks a structure, it needs to what? To retrace to the downside. That is to say what? There's a transaction going on and it needs to be what? Completed. And that is what we call what? CLQ. The higher highs is a form of what? Liquidity. CLQ, transactional liquidity. And that is it on transactional liquidity. Now, when we are talking about the other form of liquidity, which is structural form of liquidity. Now, remember when I was talking about structure and I made mention of what? When we have series, when we have something like this and price moves. Now, at this point where price creates a form of inefficiency here, and I said this point C is a trap, right? And price needs to what? To come and take it out before moving. If you have actually gone through the market structure aspects we discussed. Now, you understand that this particular point that price needs to come and take out is called what? Is structural liquidity. Any form of liquidity that is not like external is what we call structural. Now, let's take for example when we have something like this, right? And now we'll be expecting that price will come and take this point out. But in the meantime, when price starts creating something like this and pushing down, then it finally takes this out. Now, all these points are called what? Structural liquidity. This is structural liquidity. This is structural liquidity. This is what? Structural liquidity. And price needs to what? To take them all out. Then the last one here at the top is called what? Transactional liquidity, because it's the extreme and it's what? An external form of liquidity. Then price does what? Price takes out all the structural liquidity, push, and what? Finally takes out the transactional liquidity, which is the CLQ. Now you can see how price moved. Now internally, what has price created here? Price has created structural liquidity. Structural liquidity. And when price is coming back, it will what? Take out all the structural liquidity. Let's see something of this nature before what? Before pushing. And that is structural liquidity for you. Now, when we are talking about inducement liquidity, remember we have higher highs and lows, right? Now, when we are in a downtrend, we have lower high, lower low, something like this. Sorry, lower. What is going on? Lower low, lower high, lower low, lower high, lower low. Now, all this form of what? Lower low we have here is what? Inducement liquidity. So price needs to what? ILQ. Price needs to what? Push to the upside after creating a lower low. Push to the upside, probably creating structural liquidities inside, then taking out the structural liquidities and coming towards take out the inducement liquidity. So your lower lows are what? Inducement liquidity. Now, when we are talking about order flow liquidity, this is more like what we call price cycle inducement. Now, in trading, it's said, or how it's placed is that when we have something like this, when an order flow is created, let's say we have lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low, like this, and price successfully did what? Broke structure 3 times, like 1, 2, and what? And 3. Then you should expect that price will definitely go back to what? Its origin taking out all these words, all these form. Now, if you have gone through the basic form of liquidity we talked about in when we started talking about trading, you understand that this is what trend line liquidity. Then what happened? Price would come and take everything out. Price would take everything out before what continue his movement. So order flow liquidity is just what I just showed here. Now remember what I said. I said we have four types of what, or forms of liquidity. Four forms of liquidity. We have transactional liquidity, we have structural liquidity, we have inducement liquidity, we have order flow liquidity, which I've showed you some infographics. Now, transactional liquidity is used for corrections. Structural liquidity is used for what? Continuations. Inducement liquidity is used for expansions, and order flow liquidity is used for what? After 3 breaks of structures. And that is the types of or forms of liquidity that I want to introduce to you guys. And I've showed you some form of what? Some form of infographics, and I said I won't dive into the chart because I want everybody to watch. So I've digested it before we proceed further. So it's just something short. When we are going to be having the second aspect of it, it's going to be a long one because we will have to dive into the charts and how I'll have to like go deep in explaining something, showing you live examples. But for now, I would really appreciate if everyone would be able to go through this recording and try to picture whatsoever infographics I have dropped. So this is where I'll be rounding up. I don't know if anybody has any question. The session is very, very short.